Friends, this is going to be a numerical video based on a small case study where you will classify current assets, current liabilities. You will identify these components of balance sheet. Before we begin, I would highly recommend you watch some of our concept videos and video notes which are shared in the playlist as you can see on your screen. Watch these videos if you are not sure about these topics. So welcome friends. Today we are going to look at the application of the concepts of balance sheet. Basically, we will try to understand how we are classifying current assets, current liabilities, owner's equity, all these terms, how we are going to apply. We have already got some idea. So for exam point of view, application is important. You should be able to solve numericals. So that's our objective for today. Let's start. So the question says, it's a case study about Delta Manufacturing Limited. It's an auto components company. We are given the balance sheet as on 31st March. So here are the components of the balance sheet: cash, marketable securities, all other items, liabilities. Okay, now what is our task? The question is asking you current assets and current liabilities, find out, and then find out the ratio. Calculate current assets, current liabilities, and find out ratio. This is a simple question to start with. So our first task is identify current assets. Current assets means within 12 months they have to be converted into cash. So cash definitely is part of current assets. Marketable securities are short-term uh, assets which will be converted into cash. Receivables, account receivables definitely. Inventories, prepaid expense we have already discussed is part of current assets. Then plant and machinery, no. Fixed asset, land and building, fixed assets. Patents, no, it is intangible part and part of long-term assets. Long-term investments, this is also not current assets. So we have identified the top five. Let's add them up. 5 plus 3, 8, 12, 20, 35, 37 is the current asset. Now current liabilities. Accounts payable, yes. Current liability. Short-term borrowings, yes. Current portion of long-term debt, absolutely. Provisions, always part of current liabilities. Term loan due in greater than 1 year, no. Bonds, no. These are long-term borrowings. Common stock is part of owner's equity. Retained earning, owner's equity. So the top four portion, this is current liability. You will get 70, 20 to 25. So the ratio will be 27 current assets to current liability. So current assets is 37 divided by 25. This should be your answer. So if you divide 37 by 25, you will get roughly 37 divided by 25 would be 1.48. So C will be your answer. Let's move to the second question. Percentage of total assets owned is owner's equity. Owner's equity consists of shareholder funds basically. Also reserves. If there are reserves from profit, they have transferred the money to balance sheet to reinvest in the business. That will be shown in owner's equity. So here in liability section, you will have owner's equity. We just discussed common stock is definitely shareholder funds. So that is part of owner's equity. Yes, and then retained earnings, that is profits you have transferred for reinvestment in business, will be part of balance sheet under owner's equity. So these two terms, 35 crores, will be our total owner's equity. Now, percentage of total assets funded by owner's equity. So you know the concept of balance sheet, assets and liabilities. Liabilities, you have owner's equity and other liabilities, which will be long-term and short-term borrowings. So these assets have been funded either by owner's equity or other borrowings. Okay, now we have to find what is the ratio, percentage of total assets. Total assets, just add all these assets. Till here we have already added 37 plus 20, 57, 82, 87, 95. So total assets is 95 crores and our amount of owner's equity is 35 crores. So 35 divided by 95, it will be roughly 36.8%. So C will be your answer. So I hope you are clear about this funda of owner's equity. Okay, what are components will be part of owner's equity. Now let's come to the next question. Balance sheet of Omega Traders Private Limited. So here we have all the items from the balance sheet of Omega Traders. So it's a simple question of classification of current assets and current liabilities. We have to identify which are the current assets and which are current liabilities. The only trick is there will be some questions which will be slightly confusing, but if you are clear about the concepts, you will get it right. So let's discuss. So in this type of questions, you can easily solve the question also by eliminating options. Okay, let's check. Current assets, they are saying 0.12356. Let's check one. One, cash at bank is current asset, easily current asset. Two, advance paid to supplier. Yes, it is something which will give benefit in the future, but it is an advance payment, so we will not consider as an expense now. Right now, we will add it to the current assets portion of the balance sheet. Accounts payable is current liabilities. It is to be due within 1 year, so it will be part of current liabilities. Term loan due within 10 months, again current liabilities. Prepaid rent, it is always part of current assets. Expenses, if they are prepaid, it will be part of assets, current assets. Trade receivables, again receivables have to be converted into cash within 12 months, part of current assets. Goods in transit, yes, a part of your goods, so it will be part of current assets. Accrued salaries, salaries, they have not been paid yet, so they are due for payment, so that means it will be part of current liabilities. Accrued salaries. Income received in advance, unearned revenue. So this is important. If the customer has given you money, given the business money, but goods are not delivered, so it is not an income uh, which is recognized till now. It is unearned income. Okay, it is just received in advance, so it will be part of current liabilities. It will only be converted into income once you saw when you once you deliver goods to the customer. Okay, so still then it will be part of current liabilities. Bonds repayable in 8 year, it is long term liabilities, neither current. Long term liabilities, it is neither part of current assets or current liabilities. Okay, this is long term liabilities. Now let's look at the option. So in the option easy way, you see straight away you see bonds. Bonds is shown as current liability. So this option cannot be correct. No need to even discuss. A is wrong because in current liabilities they have shown bonds. Wrong. Okay, then let's say in current assets they have shown 10, point number 10 bonds. So this is also wrong. Outrightly rejected from the options. Now we are left with two. Let's see B. 1, 2, 5, 6, 7. 1, 2, 5, yes, 6, 7. So the current assets are matching, correct. Current liabilities 3, 4, 8, 9. 3, 4, 8, and 9. So this is our answer. No need to look any further. 1, 2, 5, 6, 9, 9. If you see income received in advance, it is not asset. It is unearned revenue is always part of current liability. So this is also, so option B is your right answer. So this way, quickly looking at options, sometimes you can solve the MCQs. Okay.